Hello and welcome to our US inflation update. This is Ahura. I'm going to watch the US inflation data and its effect on the markets. Let's review first the published data. The inflation numbers published just a few minutes ago. Today we had a consumer numbers, and yesterday we had a US producer numbers. Let's review first both of them. The consumer numbers shows that the US inflation headline increased by 0.3%, a little bit lower than estimates in April, and same 0.3% for the core inflation, which it was also in line with estimates. But on the annual base, core inflation increased by 3.6%. It was in line with estimates, but 0.2% lower than previous months. And headline inflation increased by 3.4%, one digit lower than previous ones. As you see, these numbers at the first glance, they can be optimistic and kind of they can help us to see that, okay, the inflation is lowering, it's decreasing. But if you look at yesterday's producer inflation numbers, we can see that the PPI increased 0.5%. Both headline PPI and core PPI, both of them increased by 0.5%, much higher than estimates, which means that this 3.4% current consumer inflation will have a hard way and long way to fall to 0.2% to central bank's 2% target. Okay, by this remembering this description, let's go to the chart and see how they affects in the chart. This is USD index chart. As you see, these numbers means that the US Federal Reserve will not have any rate hike this year, and we should think about one or two. At least we should have, probably we will have at least one rate cut. So the question right now is here that we will have a one rate cut or two rate cuts. I don't think that we can go to three rate cuts because in 2024, because the current inflation is much higher than central bank's targets. But so far, these numbers, as these numbers means that we will have a rate cut for sure this year, and they will support the lower or less hawkish sentence. It means that pressures on the US dollar index, which means the positive number or positive news for US stock markets. And as you see, S&P 500 started increasing. Totally, S&P 500 already returned to a clear uptrend, and as long as it's trading above 5,150, it's in a clear uptrend. This is the pivot key pivot level, as you see here. If you go back, you can see this digit, this level is a very important level as a key level for the US 500 or S&P 500. And as long as this index is increasing or trading above this level, we can say that the uptrend is can continue further. But return under this level can change the market sentiment from the technical point of view. From the fundamental point of view, right now, market can support this uptrend. But as I told, since producer inflation is much higher than estimates, and it means that in the next month, still we will have a higher inflation, and this higher inflation will stay longer. We cannot count too much on a dovish policies this year. So, which means that this uptrend cannot go so fast, it cannot go to much higher numbers. So for now, this is a kind of soft uptrend, but it's a very sleepy, and it can change anytime. So the same condition and same situation we have in the Dow Jones. As you see, the Dow Jones also is moving in a clear uptrend, with the pivot level at 38,000, almost 38,500 kind of. We can say this is the key pivot for the Dow Jones. But generally, this digit can support the US stock markets and pressure the US dollar as it is already affected. But as I told, We have the producer inflation at increasing by 0.5%, which gonna affect the consumer inflation as well in the next month. So we cannot count too much on lower inflation in a short term. That means higher for longer still can continue, and most probably we cannot have 3 rate cuts in 2024. That means in a short term, we will have a pressure on US dollar. Stock markets can increase as it is increasing right now, but in a long term, that is not what we are going to see. And it's very risky to count on a higher numbers as the inflation digits shows it's very risky. And it's much higher than 2% of central bank target. So just check inflation has decreased, but it is at 3.4%, which is much higher than central bank's 2% target. And this is while producer inflation also is increasing. So don't count too much on the dovish policies from the central bank in the short term. So as I told, in the short term, the soft uptrend this can continue, but it's very risky to bet on bulls for now. This overall the numbers, digits, and what we can understand from the digits. Don't forget that we will have today we will have the federal Fed speakers as well, Mr. Kashkari, Neil Kashkari, and Bauman also. They will speak today, and they will have a more. They will give us more information about the U.S. inflation and as well as central bank decisions. And also there is another number that we should not forget about, that today we didn't have just inflation numbers, we had also retail sales numbers. As you can see, the US retail sales increased by only 0.2% in April, which is in April, actually in annual base, but in this month, in a monthly base, it didn't increase. Just imagine, inflation is the retail sales is just like nominal numbers. So you didn't adjust the inflation effect on the retail sales. If you adjust inflation numbers, it means that inflation was negative in this month, which means that the US GDP in the next month will get the pressure. And that's not a good news for the stock markets. So generally, these digits means short-term uptrend, but long-term pressure on the stock markets and vice versa for the US dollar. Actually, in the long term, also for the US dollar, when the economy is weak, get bigger, you cannot count too much on the US dollar, but the US dollar safe haven can help some gains and get some more demand. This is generally the inflation numbers and their effect on the stock markets. Hope it was helpful for you. If you had any question, please write down under this video in the Instagram or YouTube. I'll try to get back to you as soon as possible. See you. Bye.